We're jumping straight into AST SpaceMobile today. Everyone is watching the price action, but the real story is the imminent launch of Bluebird 7 and the shift to commercial scale.
Exactly. You're tuned into the Easy Money Show, where we make sense of the market's biggest moves. I'm glad you're with us.
And before we get into the orbital mechanics, which are honestly mind-bending, and the billion-dollar balance sheets, make sure you subscribe and hit the like button.
Please go.
The market is incredibly noisy right now. You have panic selling, you have FOMO buying, and our goal here is to be your antidote to that noise. We want to give you the signal. So hit that button and let's get into it.
Noisy is definitely the right word. I mean, if you pull up a chart of this company right now, it looks like a heart monitor during a panic attack.
It really does.
You have these massive gap downs recently, specifically following news about a billion-dollar convertible note offering. It looks scary. It feels like a gut punch if you're holding shares.
Oh, for sure.
But if you zoom out, the context changes completely.
Right, so let's unpack this. Because despite that recent volatility, and we are going to get into the nitty-gritty of why that drop happened, investors have absolutely piled into this stock.
They really have.
We are talking about 400% gains over the last 12 months. And even after the pullback, it's up, what, 62% just year to date in 2026?
Yeah.
That is not normal behavior for a telecom play. I mean, usually utility stocks move like tortoises. This is moving like a crypto coin. So what is driving this massive enthusiasm? Why are people so obsessed with this company?
It comes down to the why. And the why here is, well, it's arguably one of the biggest unsolved problems in telecommunications, dead zones.
Okay.
The core thesis, the thing that has everyone excited, is their proprietary direct-to-device technology.
Direct-to-device. Okay, D2D. We hear that acronym thrown around a lot. Apple talks about it. T-Mobile talks about it. But let's be specific here because I think there's a lot of confusion.
There is.
What makes AST's version of this so special? Because I see other companies claiming they can do satellite connection and, I'm pretty sure I've seen those old satellite phones. They're not exactly impressive.
And that's where it gets really interesting and where the moat exists. Most competitors in this space are offering a service that connects to a satellite, sure. But usually that requires special hardware. You talk about those big, clunky satellite phones that look like a brick from 1990.
With the huge antenna, yeah.
The huge antenna you have to point at a specific spot in the sky. Or, if it works with a regular phone like the SOS features we've seen, it is strictly limited to text-only emergency services.
Right, the help I'm stranded on a mountain text. Useful, absolutely, but you aren't exactly scrolling TikTok with that.
Exactly. You're not hopping on a Zoom call. It's extremely low bandwidth. AST SpaceMobile is doing something fundamentally different.
Okay.
Their technology connects unmodified smartphones directly to their satellites for broadband.
Unmodified, so no special case, no app.
Nothing. We're talking voice, video, and data. You could be in the middle of a national park or on a boat in the middle of the Pacific, holding the standard iPhone or Samsung you have in your pocket right now, and you could FaceTime someone. You could stream a movie.
I want to pause on unmodified for a second because I don't think people realize how physically difficult that is. I mean, your cell phone is designed to talk to a cell tower that is, what, 2-3 miles away?
If you're lucky.
It has a tiny battery and a tiny antenna. It is not designed to shout hundreds of miles into space. How on earth do they pick up that weak signal?
That is the engineering miracle here. It's a physics nightmare.
Yeah.
The satellites are flying at 17,000 miles per hour, so you have the Doppler effect warping the signal.
Right.
And the distance is just immense. It's like standing on a skyscraper in New York and trying to hear someone whispering in Philadelphia.
So how do they do it?
The Bluebirds, the satellites, these things are massive. They are not your typical little metal boxes. They are essentially flying cell towers with these enormous phased array antennas. They unfold in space to create a massive surface area. Think of a tennis court floating in orbit, specifically designed to catch those weak whispers from your phone. That is the killer app.
No extra dongles, just your regular phone working where it never worked before.
That's the dream.
And this isn't just theory, right? I mean, this isn't just a PowerPoint deck anymore because they've been testing this.
Correct. And that's a crucial point. The physics has been validated. They launched Bluebird 6, and the data coming back from that satellite has been, well, a game changer.
What did it show?
It delivered 10 times the prior capacity. That proved they can handle the bandwidth needed for actual internet usage, not just a text message. They proved they can hear the whisper and shout back.
So the tech works. That's step one. But cool tech doesn't always make money. I can list a dozen space companies that had cool tech and went to zero.
True.
Let's talk business. Because usually with space companies, we are talking about potential revenue in 2030. But AST has a backlog, right?
They do. They have what we call the billion-dollar backlog. Over $1 billion in aggregate contracted revenue commitments.
And these aren't just handshake deals.
No, these are commitments.
Yeah.
And they are trying to build this network alone, which I think is a massive strategic advantage. They're piggybacking on the giants.
Right. AT&T, Verizon.
Precisely. AT&T, Verizon, the STC group. These are the biggest telecom players in the world. They aren't trying to compete with Verizon. They're becoming a wholesale service provider for Verizon.
Which makes sense. For a telco, building cell towers in the middle of nowhere is super expensive and unprofitable.
AST solves that for them, and the confidence level from these partners seems unusually high.
Right. You mentioned the Seat Group deal.
That's the one. They didn't just sign a contract, they made a $175 million prepayment.
A prepayment in this economy. That is significant. Companies don't hand over that kind of cash up front unless they are incredibly confident it's going to work.
It speaks volumes, and it all connects to the bigger picture of the market opportunity. I mean, we are looking at a potential duopoly. It's basically AST, SpaceMobile, and Starlink targeting the entire globe.
What's the market size on that?
The total addressable market is 5.8 billion mobile subscribers. So when you see that scale, billions of customers who already have the device, you start to understand why expectations are shifting.
And speaking of expectations, we have to mention where the institutional heads are at. We saw Deutsche Bank recently revise their price target up to $137.
Yeah.
Now, we aren't giving financial advice, and price targets are just opinions. But when a major bank hangs a number like that on a stock trading so much lower, it tells you their models see a path to massive commercial scale.
It does. It validates that if execution holds, and that is a big if, the upside is calculated in multiples, not percentages.
Okay, but we have to be real here. You mentioned the if, and recently the chart took a nosedive. The floor fell out. If everything is so amazing, why did the stock crash? Let's play the skeptic.
Let's do it. The bear case.
What is it?
The drop was triggered by a very specific event, the dilution event. The company announced a $1 billion convertible senior notes offering due in 2036.
Okay, let's break that down. Convertible senior notes sounds like boring finance jargon. Why did the market hate it so much?
This is a classic case of market mechanics versus long-term value. In the short term, the market hates uncertainty and it hates dilution. A convertible note is basically debt that the lender can choose to turn into shares of stock later.
So a loan that becomes stock.
Right. And when you introduce the possibility of more shares, it dilutes the value of the existing shares. It's like cutting a pizza into more slices. Your slice gets smaller.
Okay, that makes sense.
But there's a more aggressive mechanic at play here called arbitrage. The hedge funds get involved.
Ah, the hedge funds.
Exactly. Often the institutions who buy these convertible notes will set up a specific trade. They buy the note, the debt, and at the same time, they short the company's stock to hedge their risk.
So the moment the deal is announced,
You get massive mechanical selling pressure. It looks like everyone is fleeing a burning building, but a lot of it is just sophisticated math playing out.
so it creates this technical sell-off that scares the daylights out of retail investors. But is there a silver lining there? Why did they need $1 billion?
That is the counterpoint,
Right.
and it is a strong one. Yes, the price drop hurts, but this move creates a fortress balance sheet. As of Q3 2025 and this raise, they have about the $3.2 billion in cash and liquidity.
$3.2 billion, that is a serious war chest.
It is essential. Building a space-based network is incredibly capital-intensive. This is the valley of death for hardware startups. You're burning cash on satellites and rocket launches with no steady revenue yet.
So this liquidity buys them time?
It ensures they can fund their aggressive build-out, the 45 to 60 satellites for 2026, without constantly worrying about running out of money. It takes bankruptcy risk off the table for the foreseeable future.
So the bear case is dilution, but the bull response is survival and speed. They took the pain now to ensure they survive later. But let's talk other risks. Execution. Space is hard.
Space is incredibly unforgiving, and AST has set a very aggressive timeline. They need to launch 45 to 60 satellites this year to hit their targets. That's practically one launch every week or two.
And we know they've had delays before, right?
Exactly. Look at the history with the FM1 delay.
Yeah.
Supply chain issues, testing failures, it happens. And every time a launch slips, it pushes back revenue.
And right now, we have to remember.
They are effectively pre-revenue. As of the third quarter of 2025, no material revenue. Free cash flow is negative. The machine isn't printing money yet.
That is a dangerous place to be if you hit a snag. If a rocket explodes or a satellite fails to deploy and these things have to unfold like intricate origami in space, you are burning that $3.2 billion with nothing coming in.
Correct. And while they are building, the competition isn't sleeping. We have to talk about Starlink.
The elephant in the room, Elon Musk and SpaceX.
Starlink has a massive first-mover advantage. They already have over 9 million customers for their dish service. Thousands of satellites in orbit. They have scale.
But their tech is different, isn't it, for
Yeah.
the specific D2D application?
It is. You still generally need their ground dishes. But they're moving into the D2D space, too. They have a partnership with T-Mobile.
So how do they compare?
Well, AST designed their satellites from scratch specifically to talk to phones. Starlink is kind of retrofitting a system designed for dishes. But, and this is a big but,
They have the rockets.
they own the launch vertical. If they can muscle their way in with sheer launch capacity, that is a huge threat to AST's market share.
So it's a race. AST has the, arguably better tech for your phone right now, but Starlink has the rockets and the existing user base.
That's the dynamic. It's David with a really high-tech slingshot versus Goliath with a machine gun.
And Goliath also owns the rocket company that David needs to use. That's an awkward dependency.
It is, which is why diversification matters.
Yeah. Okay, so we have the bull case and the bear case. If I am listening and watching this ticker, what do I need to circle on my calendar? What are the catalysts?
The next few weeks are absolutely critical. We are in a show-me period. The talking is done. They need to fly.
Immediate term, what's happening like right now?
Right now, late February 2026, we are days away from the launch of Bluebird 7. This is scheduled to fly on Blue Origin's New Glenn rocket.
Blue Origin, Jeff Bezos' company. So they aren't just relying on SpaceX.
And that diversification is vital. It proves they aren't beholden to a competitor. But this launch, this is the immediate catalyst. If Bluebird 7 goes up and deploys successfully, it validates the next stage.
It's the show me moment.
It is.
And looking a little further out, end of Q1.
By the end of March, the goal is execution on 5 total launches. That sets the pace. If they hit 5, that annual target of 45 to 60 satellites looks achievable. If they only get 1 or 2 up, the market will price in delays again.
So watch the launch count. 1, 2, 3, 4, 5. What about earnings? Anything to watch there?
Yeah, in April or May, we'll get the Q1 report. And you're right, we aren't looking for profit. We're looking for updates on intermittent U.S. service.
Which they targeted for early 2026.
Exactly. We want to hear them say yes. AT&T customers in these regions are now connecting to the network. That's the moment it transitions from a science project to a utility.
That's the proof of life.
It is. And also potentially recognizing some of that prepaid revenue. That changes the accounting. It changes the narrative. It allows funds that can only buy revenue-generating companies to finally get in.
And zooming way out, the macro view.
We are seeing a sector rotation into the space economy. It's becoming a real sector. With interest rates stabilizing, capital-intensive industries like this are becoming attractive again.
So if AST executes, they're perfectly positioned to catch that wave.
That's the idea.
So it all comes down to execution. The money is there, $3.2 billion. The tech is validated. The partners are there. Now they just have to build the network.
It sounds so simple when you say it like that, but it's probably the hardest engineering challenge on the planet right now.
So what does this all mean for you listening? The thesis is actually pretty simple. If they launch the birds and the birds work, they unlock a global duopoly and massive revenue streams. They become the cell tower in the sky for billions.
And if they delay, or if the tech glitches, the cash burn hurts, and that $3.2 billion starts to look smaller every single day.
High risk, high reward. It is the classic definition of a speculative growth play. But the validation we have seen suggests this isn't vaporware. That's the lowdown on AST SpaceMobile. High risk, high reward, and a massive few weeks ahead with the Blue Origin launch.
Thanks for listening to The Easy Money Show. Keep your eyes on the skies.
And don't forget to subscribe. We'll be back with the next breakdown as soon as the news drops. See you then.